everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. Spot steel prices in China declined this week. The spot price of hot rolled coil, HRC, fell by 50 yuan ton compared with last week, and the price of rebar also dropped by 50 yuan ton. At the macro level, the Federal Reserve, Fed, implemented a 25 basis point interest rate cut in December this week and started short-term Treasury bond purchases on the 12th, gradually easing overseas liquidity conditions. The dot plot shows that the Fed may cut interest rates once each in 2026 and 2027 and may not cut rates in 2028, with the neutral interest rate remaining unchanged at 3%. Domestically, macroeconomic data is not optimistic, and the country mainly maintains its policy stance. The Central Economic Work Conference provided limited policy support, resulting in unmet macro expectations. On the industrial side, the weekly output of 5 major steel products continued to decrease by 227,200 tons, with molten iron output falling below 2.3 million tons per day. Among the 5 major steel products, both rebar and HRC output decreased. Rebar output dropped by 105,300 tons week, and HRC output decreased by 56,000 tons week. As temperatures drop nationwide, steel mills' willingness to conduct maintenance is gradually increasing due to low steel profit margins and reduced orders, and production cuts are expected to continue next week. On the demand side, demand this week decreased by 244,500 tons compared with last week. Due to the continuous drop in temperatures in northern China, the demand for construction steel is experiencing a seasonal decline. Cold-rolled steel products maintain stable demand driven by seasonal restocking needs. Meanwhile, market rumors suggest that a meeting will be held next week to discuss the issue of steel export quota inventory, which severely dampened market sentiment and weakened speculative demand. In terms of inventory, the destocking rate of the 5 major steel products remained the same as last week, with an overall weekly destocking of 335,000 tons. By product type, rebar destocked 243,100 tons, maintaining strong resilience. For HRC, factory inventory continued to increase by 41,100 tons, while social inventory decreased by 73,700 tons, leading to increasing pressure. Although demand declined this week, the destocking rate remained stable due to production cuts. Overall, inventory pressure is within the range of expectation gaps, and there is no significant contradiction. In summary, both supply and demand continued to decline this week, inventory pressure eased and production gradually decreased, with the steel destocking rate remaining stable for the time being. As molten iron output continues to decrease, pressure on the raw material side will further increase, leading to a drop in steel production costs. With steel mills unable to maintain high profit margins, the absolute price of steel fell due to lower raw material prices. Steel prices cannot rise significantly independently until raw material prices stabilize. Therefore, only cautious purchasing is recommended recently. We will consider increasing inventory when raw material prices stabilize or steel prices become more cost-effective. Institutions believe that inventory levels have eased, and the decline in output has provided support for steel prices. However, after the seasonal decline in demand, there is limited room for steel prices to rise. Additionally, as export quotas will take effect on January 1st, the sentiment impact on exports is negative in the short term. In summary, overall steel prices have support but limited upside potential. In summary, the price support for steel products has weakened recently. Purchasing should be carried out strictly on a demand-driven basis. Among various steel products, rebar and billets will demonstrate relatively stronger performance. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.